You just have to be aware of which one you're doing. And then fear of missing out. That's the basically that's the lack of patience. When stock goes ripping higher in the morning, you just don't have the discipline to sit there and watch it. And listen, everybody gets that. I've watched stocks take off in the morning, and I see them going up, stacking candles, and you start thinking, I'm missing out on all this money. That's fear of missing out. Please don't do it. Okay, and there's that quote that I really like. Greatest enemy of knowledge is not ignorance. Not knowing something is better off to not know anything than to have an illusion of knowledge, because this gives you a false sense of security, a false sense of confidence in a trade that's not going to work. And a lot of times you'll stay in them way too long because you think they should work. Okay, so this is what the SPY super system looks like. Let me show you something before I show you this. This is the actual SPY super system right here on Thinkorswim. This is what the software looks like. Okay, this is QURE. This is a chart I traded yesterday. But these are the indicators on here that we use on the 5-minute chart. This is a 5-minute chart. We have some scanners over here. This is a scanner for relative strength, a scanner for relative weakness. This is a scanner for bullish swing type stocks. Right, but these are the indicators. What we've got here, the key things is this is the actual indicator itself. This is what's called a modified Laguerre. It's an oscillator. It has the divergence stripped out. It's just showing true, pure momentum. This is what we use. This is current time frame momentum. On a 5-minute chart, this is the current time frame momentum for a 5-minute. Green and blue are bullish, red and yellow are bearish. So you can see this in this time frame on QURE. This is yesterday, I think, that you see how bullish it is on the 5-minute, the multi-time frame. This is multi-time frame momentum, and this is the long-term trend. This is what tells you what the institution is doing. This tells me, just by a quick glance, that the institutions are buying the heck out of this thing right now, right? And I'll show you some charts how we take advantage of that, even on intraday trades for quick trades. You know, if you were looking at a swing trade, you'd be looking at the current time frame momentum and the multi-time frame momentum as critical. They both would have to be aligned, green or blue, red or yellow for short, all right? But for a 5-minute quick intraday trade, then you can take it directly off of this current time frame momentum. And I'll just show you one right here. This is one that I took yesterday. If you notice that it was red over here, which was bearish, and went to blue, which is bullish, and then it went to green. And this pink line right here is called the volume weighted average price. That's the VWAP. This is what all the institutions use to buy and sell. When this stock breaks above that VWAP right here, this is where I took the trade. It's compressing and it breaks out right there. I take it long and I just ride it up, and as long as it stays above the 15, I ride it up. And this was a beautiful, beautiful trade yesterday. I took 2 of these. But this is what the SPY super system looks like. I'm going to go back to the slides, but I just want you to see it in real time. This is what it looks like. And we'll look at a few more of these as we go forward. Okay, so let me go back to the webinar. So I've got them just highlighted here with the verbiage on these. Momentum oscillator right here. This actually is the oscillator that creates this momentum, current time frame momentum right here. This would be on a daily chart. This would be 5 minutes. This is multi-time frame momentum on a daily chart. That's the 5-minute, the 15-minute, and the 45-minute. It's looking across all 3 of those. For all 3 of those to be red, this is mean we're getting a multi-time frame momentum is red. Here we're saying that the institutions are starting to come in and starting to buy it right here, but it hasn't flipped over to the multi-time frame. But this is all I need for a quick intraday trade. But if this was a daily chart, these would both have to be a bullish or bearish. So you get current time frame momentum, multi-time frame momentum, and long-term trend. Right? See, these are the key levels that we're looking at, or the key indicators we're looking at on the 5-minute chart itself. The most important line right here is this pink line, is VWAP. It's volume weighted average price. That's what all the institutions use to buy and sell. You're going to go long, you want the stock price to be above the VWAP. If you're going to go short, you want it to be below the VWAP. It's a key level we use on 5-minute trades. You do not use the VWAP on daily charts. Now, this is a 15 EMA of an EMA. This is a smooth 15 EMA. When the price gets away from the VWAP, this becomes a support and resistance level. This is what we use to trade 5-minute candlesticks right here. All right, that's the 15. And then we have a pivot point right here, this white line. I only have one pivot point. It's a very strong pivot point. I don't trade off of it, but as the stock price approaches it, if I'm in a trade, I'm going to think seriously about taking profits. And then we have these pop symbols right here, these pop out of the box symbols. You see these blue ones here? These are breakouts of compression to the downside. And then we have pink ones that show breakouts to the upside of compression. There's one right there. So these help you enter a trade by knowing we're breaking through the 15, it's coming down, the institutions are selling it, you can take it short right here, ride it down to the VWAP and then get out. All right, so those are the indicators that the SPY super system has on. Okay, any questions on any of those? We're going to see lots of them as we go forward here. This is all you need to know to know if the institutions are in the trade. Now we did add one more thing. This trend down here. This is called the market internals. We use this on a 5-minute chart. When this tells us if it's trending down or trending up, and it goes from red for bearish to yellow for bearish, then to blue for bullish and green for bullish. Right? Trending down yellow means it hasn't really gotten seriously bearish yet, but it's getting there. So this keeps up all day long, and it gives you an identification. Gives you an identification of what the market internals are doing right now. Right? Market internals is how much volume is on stocks that are going up right now, minus all this amount of how much volume is there on stocks going down right now. And if it's bullish, it's going to be green or blue, and it's going to say trending up. And if it's bearish, it's going to be yellow or red and trending down. So if it's trending down, that means right now there's more volume going into stocks being sold than there are going stocks being bought, and that's across the whole New York Stock Exchange. Right. So the rest of it's the same, of course, but we have added that as the current market momentum that shows up here. All right, and just a couple of quick trades I want to show you that we've taken so you can kind of see how this works. This is a trade in NVIDIA. This is off the daily chart, so this was a swing type trade. This is where we took it, where this little arrow is. If you look at what you see here, you see it moved up. We didn't take it in here. I took it here on this. I probably didn't notice it here, but I took it on this drop back down to this 15 EMA. This is what's called a PBO, a pullback opportunity. When a stock pulls back to support, like the 15, and it's got institutional buying, which it obviously does. You can see the institutions are buying the heck out of this thing. The next day we bought it right here as it bounced off the 15, and we took it off right here, and we were in there from 8.4 to 8.7, 32% profit on that trade. That's a swing type trade. So you'd have to have the daily chart, the current time frame and multi-time frame momentum would have to be aligned, which they were. Okay, this was SMR. This was another nice one. Another daily chart. This is a swing trade. We took it in right here. This shouldn't be here. We took it right here. Notice that they had earnings here. This is a bearish right there. You see the bearish yellow right there? Then you see how it went to green, bullish, and the multi-time frame was already bullish on the daily chart. This is where we take the trade. Now the institutions are in across the board here. Trend was up, we take it right there, and we were get in for a 56% profit. We get in on 513 and get out on 515. 2,000 invested in the options, created $1,170 profit. And I use $2,000 invested as just a baseline, so I've got something to compare everything to. Obviously, nobody has to do that, but all my results that I post are going to be based on $2,000 per trade. Same amount of money, not the same amount of contracts, same amount of money in each trade, right? This is a 5-minute trade. This was an intraday trade. This is what we call a SPY super system trade on the 5-minute chart. And if you notice, we're only interested now down here in the current time frame momentum. And this was a Tesla on the breakout in the morning right here. See how it went above the VWAP? And it's blue. We can take it right there as it breaks above the VWAP. We can take it there, make sure the price stays above the VWAP because that is our support level, right? Buy at support. We're buying right there. We get up here, we take it off right here, about $307 right there. So that's a nice little move. It's a quick trade. It's what's called a SPY super system methodology trade using the current time frame momentum only. Okay. This was another one on the SPY. This was actually a SPY super system trade on the SPY. So here's the VWAP right on the 5-minute chart. Here's the current time frame momentum going from bearish here to bullish. See, it turns from yellow to blue right there on that pop. See how you get a pop out of the box and it goes above the VWAP? That is the ideal perfect entry. You just take some calls on the SPY, you ride it up, It gets up here, starts to turn around, you take your profits right there. Really not complicated when you're just looking at them. And we can see the institution stayed in this. They stayed in it all the way across here. So you could have stayed in the trade. But for me, if I'm in a trade, I'm up here and I got a good big profit, I'm not going to hang around it if it starts to pull back. I'm going to take my money and run. Okay, and this was Wendy's. This was another bullish trade, a bearish trade overnight. Daily chart right there, daily earnings. You take it right here as it goes from buying, see the blue, to selling to the red. We take it right here. We take it overnight. We take some puts overnight. We're out the next morning right here on this move down. Institutions selling it. And this is just a touch of humor. This is basically what emotional traders look like. And they may not look like that, but that's what they feel like. And trading emotionally is a really big problem for most traders. If you're doing FOMO or you're watching your P&L, you're instilling emotions into your trading. And if you're trading off emotions instead of off of technicals, you're going to get in trouble. It's a very, very bad situation to be trading emotionally. You don't want to do that. You want to be as calm and relaxed as possible, just trading off of very specific methodologies. And here's somebody who's got the SPY super system, is happy with the results he's having, and he feels happy about winning like this. So it's a big difference. You don't want to be this guy. All right. The process procedures, I'm just going to run through this quickly. And this is kind of goes back to not using your P&L. It's important to learn the high probability trade setup criteria and internalize those, and they got to come before we focus on results. You've got to learn the process before the results are going to come. And if you're looking at your results and trying to decide whether you're a consistently profitable trader just based on your P&L without having learned and internalized the criteria and the methodology to use, it's going to end in failure. If you're trading in P&Ls, you're going to be in big, big trouble. All right, we talked about that before. This is what we look for the high probability trade setups. I call it the high probability trade setup funnel. This is the thought process that I go through when I'm looking for trades. So I look at the daily chart first if I'm going to take a potential swing trade. And a swing trade to me is anything that's going to last 4, 5, 6 hours up to 3 weeks. I mean, not a 20-minute trade, but anything that's going to last for at least a few hours, several hours, up to a few weeks. The daily chart, I have to look at that. That's going to be bullish if I'm going to go long. If I like a stock and the daily chart's not bullish and I want to go long, I can't take it. So the daily chart's got to be bullish for a long, bearish for a short. And then you look at your 5-minute chart and try to find a good entry out of that. Okay? Trade with the trend, both the stock and the market. All right, this is important. Again, this is another one. Trade with the trend. What's the market trend? You want to be trading in the direction of the trend the market's in, if at all possible. On a day like today, when the market was down all day, SPY was red, Qs were red, you should be looking for shorts if you're going to have intraday trades. Swing trades is a different story because it's tough to trade swing trade shorts right now, but you want to trade with both the stock and the trend in the market. That's what's called the context. The SPY super system must align. Your SPY super system got to be bullish for a long trade and bearish for a short trade. Simple as that. The current time frame momentum, multi-time frame momentum, both have to be aligned. And then you trade relative strength and relative weakness, and then you try to enter near support and sell near resistance. That's the whole process right there. Right? If you've got a stock that meets all these, but it's not near support, you can put an alert on it at where the support level is and have it alert you when it gets to that level. Okay? Okay. All right, so somebody's just telling me that the members of the Oracle and Google are popping after hours on the TikTok news. These are the strategies we use in the room. We do straight calls and straight puts. Of course, we do a lot of these. I do straddles and strangles. Straddles and strangles are a particular option strategy where it's considered non-directional. You don't care which way the stock goes. You just want it to go in one direction or the other by quite a bit. Straddles and strangles, very effective trading strategy, and we use these quite a bit. I use debit spreads using weekly options expiration. Debit spreads reduces the cost of your trade as opposed to a straight call. And we do it with weekly expirations. The debit spreads on weeklies expiration dates tend to generate much better ROI than something that's going out 2 or 3 weeks. I do time spreads over earnings. We do these quite often during earnings season. This is another non-directional trade. We capture volatility crush when the earnings come out as the market makers jack up the premiums. And we have a weekly ATM strategy to capture the premium week after week. And we do some credit spreads. We did one today on CoreWeave. We've got a credit spread for October 17th on CoreWeave. We got we sold $110 put, bought the $105 put. It's way out of the money and captured about $110 of premium doing that. And then we also do SPY super system trades in the room. Now this is a very high probability trade setup that lasts, they're very quick. They're on the SPY, the Qs, the IWM, or you can do them on the futures. Or you can even do it on some stocks. But these are very quick, and I have a video on how to do these, the structure, the criteria, but I can't post them or call them out in the room because they're too fast. But it works really well, and for people that want to take a lot of trades that are high probability trades, this is nice. For people, they're basically scalping type trades. Okay, and the alert service, by the way, is designed for day trades and short-term swing trades. It's not basically an investment type letter. It's for day trades and short-term swing trades, designed for traders who don't want to watch or can't watch the market all day. And we put out real-time alerts on the highest probability trade setups. Any trade setup you get on alert is going to be a high probability trade setup. That's all we send out. And the highest probability trades we identified by looking at stocks that have institutional involvement, market internals, and technical analysis. This is how we determine what the best trades are. And we have to look at the charts to come up with that. This is my equity curve from this year. This is based on $2,000 a trade because I don't do that necessarily. I vary my amounts, and sometimes they're a lot more than that. But for anybody putting $2,000 into a trade in the room, this is what your equity curve would look like for this year so far. Okay, if you took every trade. All right, now we're going to talk a little bit about Heikin Ashi candles here, and I'm going to show you a few real live charts with Heikin Ashi candles and how to use them, how to help improve your trading. So let's talk about Heikin Ashi candles. This is just a graphic of a candlesticks. Now this is British pound, Japanese yen, doesn't matter. It could be anything. It just happens to be the example I got. But the stocks, the options candlesticks right here, the candlesticks that have flat tops on them like this, flat top candlesticks are called bearish Heikin Ashi candles. These would be set up as a Heikin Ashi candle, and you can create the candles on your room, in your platform, to be either a Heikin Ashi or a regular candle, or high, low, close, whatever. But these are Heikin Ashi. Notice flat top candles, bearish Heikin Ashi candles. This is a downtrend, a Heikin Ashi downtrend, bearish. You can see the flat top candles repeating one after the other as we come down. Now, the way we generally use Heikin Ashi reversals is in a stock like this. Let's say we were looking to actually go long. We're waiting for it to pull back to support. So we see it coming back, and we're getting flat top, flat top, flat top. Now it starts to get wicks and tails, and then we get a flat bottom candle right here. Right now, this is important, what I'm going to say here, because this is a Heikin Ashi bullish reversal candle right here. And a lot of people would grab that for long, and you probably would have made some money on it. But one of the criteria that you need to have when you're getting a Heikin Ashi reversal to go back into a trend, the candlestick that's creating the reversal needs to be as big as the candlesticks that caused the actual downtrend in this case, right? So I wouldn't have taken it there. I'd watched it, and I'd watch it, and this is where I would take it. It chops around. You get another Heikin Ashi reversal candle with a flat bottom. Flat bottom is bullish. Flat top is bearish. See how big that candle is compared to these? That is a Heikin Ashi reversal. This is where you would enter the trade right here, and this is where you would take it up. Flat bottom, flat bottom, flat bottom, flat bottom. These are all Heikin Ashi candles with flat bottoms with a doji mixed in. And then when you get up here, and then you get wicks and tails, you take profits right there. That's a trend, and a Heikin Ashi, bullish Heikin Ashi trend with Heikin Ashi candles, and they're much easier to see than they are with regular candlesticks. right? So that's Heikin-Ashi candles. Now the distinction, as again, let's focus on this is the most important thing to take away from Heikin-Ashi candles. Bullish Heikin-Ashi candles have flat bottoms. Bearish Heikin-Ashi candles have flat tops. There's a big difference here. And again, the Heikin-Ashi reversals are identified by bullish reversals, flat top Heikin-Ashi candles, followed by flat bottomed Heikin-Ashi candles. And there can be other candles mixed in between, obviously. They can be doji candles. A bearish Heikin-Ashi reversal is identified by flat bottom candles, followed by flat top Heikin-Ashi candles. Right? Those are your reversals and what Heikin-Ashi candles look like. Right? And understanding these, here's another description of this Heikin-Ashi candle trend right here. These are all Heikin-Ashi candles. Flat bottom candle in an uptrend signals a strong visual of a current trend. So this was the trade we just looked at. Flat top, flat top, flat top. Those are Heikin-Ashi candles, bearish Heikin-Ashi candles. Now let's say this blue line was, for example, a VWAP or a support level. This is where we're waiting for the stock to get above that because we wanted to go long. So it chops around, it breaks above there with a Heikin-Ashi candle right there. See the flat bottom? We had a flat bottom reversal, then we break through the resistance level. This is where you would take it, and you would stay in it as long as it stayed above your resistance level, which it did, right? And you just keep stacking candles. You see how smooth that is? And you can just see the uptrend, one candle after another, after another, after another. Probably start to think about getting out right here. If you're stuck in it, you're obviously going to get out here because here we're getting wicks and tails and then a flat top. This is a Heikin-Ashi bearish reversal right here. You take your profits, right? So that's what you're looking for. Now, I'll show you some live charts on these. Okay, so we already covered this. That's the distinction of the Heikin-Ashi candles. All right, so this is the advantages of these Heikin-Ashi candles. It's smooths out price action, reducing noise, right? Very important. The noise a lot of times on 5-minute candles will shake you out of a trade. Smooth Heikin-Ashi candles will smooth that out. They make identifying trends much easier. They improve identifying confirmation of trends or trend reversals. This is a big one. When you're looking for a stock to pull back to support and then bounce, this is a really critical way to use that. And it helps identify potential exits when the candle bodies shrink or the reversal occurs. That's what your recap of your Heikin-Ashi candlesticks. Okay? Now this is a graphic on Uber. I just want to show you the difference, one chart with the difference between regular candles and Heikin-Ashi candles. This is Uber. It's back a couple of years ago. Doesn't matter. I want you to focus on the May 1st date right here. Right, so here's May 1st. You see how we get a gap up and then another gap up. These are standard candles. It's kind of difficult to grab that. This is the Heikin-Ashi candles on May 1st. See May 1st right there? Notice no gaps. There's no gaps in Heikin-Ashi candles. And if you were taking this trade, you see how you had your candlesticks coming down here with flat tops? And then switch to a flat bottom. That's a Heikin-Ashi reversal candle right there. And see how big it is compared to these? That's where you would take the trade, right there on May 1st. And then you would just ride it up in Heikin-Ashi candles until you're ready to get out, which would be right about here. All right, and this is TC2000. I'm showing you this on a different platform because of the colored candles, but we'll show you this on the SPY Super System in just a minute. But that is what it looks like. So again, here's what it went from right here. This is where you would have got in, right here on this candlestick. You might have had a hard time doing it here because it was such a big move up. But if you're taking it here, right there, that confirmed that candle is a Heikin-Ashi reversal candle. You can get in. Now, it's important to remember, once these Heikin-Ashi candles start to form during the day, on a 5-minute chart, once you're about 2 minutes into the candlestick, if it's got a flat bottom, it's going to probably stay that way. And on a daily chart, if this is like 1 o'clock in the afternoon and you got a flat bottom, it's very likely it's not going to reverse from there. It's going to stay bullish. All right, so that's important. So there's your Heikin-Ashi candles. That's what it looks like. One thing to notice also, I didn't point this out, was Heikin-Ashi candles. The next candle always starts in the middle of the previous candle because of the way they're constructed. It always starts in the middle of the previous candle, just like that, all the way up, always in the middle of the previous candle. Okay, so we're gonna look at some live ones here. So I'm gonna bring up the software here, SPY Super System software. I do want to show you one thing here. This is a trade I took yesterday. Now, this is QURE. I took a couple of trades on this yesterday. This is yesterday's price action right here. All right, on these Heiken action, on the QURE, right? But if you look here, if you look and you can see that the institutions are buying here in the current time frame momentum, right? But you notice the stock is below the VWAP. You want to go long once it breaks above. Now you could have taken it right there and stayed in. You probably might get shaken out. But this is where it stays green here. This is where I would have taken it right here. As it breaks above here and shows some consistency in candlesticks, you can take it long right there. And once you break above, you see how it stays green? You can take it there, and then VWAP becomes your stop. And then as it pulls away, the 15 becomes your stop. This was a nice trade yesterday on this QURE, and this is where you would want to get all right here. We had a couple of those yesterday. There's another nice one right here because the institutions are buying it. That's what you would use. Right now, if I switch these candle style over to Heiken Achi, look at a couple things here. Okay, it's Heiken Achi. So there's Heiken Achi candles. You notice here where it comes across. You see how you've got wicks and tails, and then you get flat bottoms. See these Heiken Achi candles right here with flat bottoms? See how you can see the trend? Flat bottom, you get a little bit of a tail there, flat bottom. And then when you start to get these tiny candles, you can get up. But very easy to see, all right, on how these things work. All right, now I'm going to switch this over to daily chart because I'm going to take a look at some Heiken Achi candles from today's scans. I need to take a look at some. I just run a quick scan over here so I can see which one of these is looking good. And it might be a little tough today because for long because we didn't have it was a fairly bearish day. So let's take a look at a couple of bearish ones first. Okay. All right, so we'll look at one here. This is called Eat. This is Brinker's International Restaurant. All right, here's the daily chart on this. This is something we'd want to go short here right now. If you look at this, you can see we've already had a bunch of Heiken Achi reversals here. See this Heiken Achi reversal, and then a continuation to the downside. Now we're compressing. This is called the Heiken Achi continuation candle right here. See how it goes from wicks and tails to a flat bottom, flat top. That's a Heiken Achi reversal to the downside. So this could be taken as a short. All right, this could be taken as a short tomorrow morning if it opens red on EAT because the institutions are selling it off. Right, so that's important that they're doing that. We take a look at CPRT. And these are Heiken Achi candles. Again, this is a continuation. The market's been pretty weak here on some of these trades. So you can see this one, this was the perfect entry for it here. Now it's flattening out. Now we can do it again tomorrow to trade this to the downside. CPRT. The CRM is also one, but let's take a look at it. See if we can trade it. See now here's a CRM. This is a Salesforce. It came down and now it's bounced up and now it's got a Heiken Achi reversal candle right there, right to enter this trade. But notice that the monthly time frame is bearish, but notice the current time frame is still blue. We can't take a short trade in this as a swing trade because we do not have these aligned. This would need to be yellow or red. It's not. So when we see that situation, even though the stock looks like it's a setup, we can't take it because the institutions are not in this yet on the daily candlestick. We'll take a look at Amgen. Another decent short here. And here's Amgen. Coming down, bounces up with a Heiken Achi reversal to the upside. Can't take it because see how this is red. Now we cut back down today. This is a Heiken Achi reversal to the downside right there. Bearish candle, flat top. We go to yellow. This is a short for tomorrow. Amgen, this is a short for tomorrow. We have to obviously get a look at other things in the daily chart, but this is a definite short setup. That's what you're looking for. You're looking for the Heiken Achi reversal, and you're looking for your SPY super system to tell you that the institutions are taking it short. I'll see if I can find any longs. It's probably going to be tough. But we'll take IBM, which is probably a little extended. But again, here's IBM. We had a little bit of a wick and tail yesterday. This is actually a bullish Heikin-Achi continuation because it's moved up and already did a Heikin-Achi reversal. So this is a continuation, but it's nice, green across the board. Definitely a good long right there. Right, CNC is another one. Okay, CNC pulls back, flattens out, Heikin-Achi reversal right here, right here, right here. This is a Heikin-Achi reversal trend to the upside. You can take it long because your current time frame, multi-time frame are green. You can still take it even though your trend is down, the longer term trend, because this caused such a big trend. But you can see the big candlestick here, and then the reversal right there. All right, what else we got here? TJX is an interesting one. And here's TJX. Now this thing has been moving pretty flat sideways for a good long time. Just chopping around, chop, chop, chop. Notice buying, selling, back to buying again. And here's a hike. You notice we got a Heikin-Achi reversal right here. We didn't have Heikin-Achi reversals in here. These are wicks and tails. Here's the Heikin-Achi reversal to the upside. TJX becomes a potential long for tomorrow. I write that down as a potential long for tomorrow if it opens green. I mean, I'm going to make a note of it right now. This is what I do in the evening, is go through and looking for setups for the next day so I can share them with the room. Okay, Yum Brand's another one. So even though the market was very weak today, there's some decent looking ones here. And the key here is you got a Heikin-Achi reversal candle. See the tail? Flat bottom. You got a Heikin-Achi reversal candle, and the market just went, the institutions just went buying on the current time frame daily, and the multi-time frame was already green. This is another good one. Yum Brands is another one you would want to make a note of as a potential long as a Heikin-Achi reversal tomorrow that has institutions in it. All right, you got to see what it does tomorrow, but that's a pretty nice setup on that. Right, so there's a few of them like that that I've got here that we trade, and this is kind of what we look for is these Heikin-Achi reversal candles. Now you can do it on the 5-minute chart as well during the day. If I wanted to trade, for example, I wanted to trade the SPY today, which was horrible, right? It was an awful day on the SPY to try to trade anything really. But if I go back to the beginning of the day, let me move my chart down here. All right, so here's the 5-minute chart on the SPY today. So what could I take something here? Go back and look. Well, right here is a pretty good one, right? It's a Heikin-Achi reversal to the downside. Notice the institutions are, this is a 5 minutes, so I only need the current time frame momentum. You see how the institutions are selling it here? And here's the flat top. This is a Heikin-Achi reversal. You take it short here because it breaks through the VWAP. That becomes your stop. You write it down, you write it down, you write it down. And here you see how we went to buying again. You got to be out. Most likely get out right on that candle, even before it turns blue because it's bouncing back up. So that's a decent trade. I mean, that's a decent 35, 40-minute trade that you would have made probably close to $100 a contract on if you had SPY puts on, right? So for the SPY. But that was really, and it was red all day long. So you really didn't want to try it long. See, if you tried to take it long here, you could do it here because here it is breaking above the 15. You see the Heikin-Achi reversal. But look where your VWAP is, right here. You're limiting your upside potential by running into this resistance level right here. It ended up working, but it would have been much more difficult, right? So that was a SPY. Now, a trade I took today was Tesla. I took this. I actually took it long today, but I'll tell you where I took it. Right in here. I just took for a short trade. You see how it went bearish to bullish? See this breakout of the over the VWAP to the flat bottom candle right here, and I just take it right there and I wrote it up and I get out pretty quickly. There's some brief price movement. This was a lot of points in Tesla, like $1.50 per contract just for that little move. But that's what I use. Right, again, these are Heikin-Achi candles. If I switch over to regular candles, this is what it looks like here. Still would have taken it in the same spot. But see how it put this red candle in with the Heikin-Achi candles, you wouldn't even see that red. It would have stayed green. Right, so that's how what you can use during the day. You can trade futures the same way if you want to. there's the ES right here, the E-minis. Okay, there's the E-minis. Again, where could you trade these things? Well, probably want to trade it short. You got to try to find a short setup. Oops. Got to go way down here. Get the ES switch back over. Okay, so there's the ES today. So there's a few potential ones. This was a good break right here, which you could take. This is a ES at about 120. As it breaks down with a regular candle to the downside, that would be a Heikin-Achi as well. You just take this short. As soon as you get a green reversal right there, you're out of it. But you notice you can use the SPY Super System on whatever you want. If this is on the ES, you could use it on the Qs. You can use it on the NQ. You can use it on anything you want to on the 5-minute chart for quick intraday trades. Okay. All right. So there is the SPY Super System in action here. One of the nice things, by the way, about these symbols right here is if I click on them, this is like a 5-minute trade. If I look at SRRK, for example, I just click on it, and it's going to bring up the chart right from that. So you can, during the day, if you're looking for stocks with relative strength or relative weakness, you can just click on them, and it brings up the actual price action for you. Okay. All right. All right. So we've looked at some Heikin-Achi reversals from Friday. But these weren't from Friday, these are from today. I usually do this on Saturday. Okay, so I'm going to look now at the results we've had. If anybody has any questions on those Heikin-Achi candles, again, you'll be getting a copy of this when you trades on the 28th to the 2nd of April here. We were in 4 months we were up here for 166%. So July was 30 wins in January, 92% win rate in February, 11 a few trades. Only lost $1,786 in the room with 2,000 per trade, and only lost $295 on the alert service. So not terrible. And then if you look at that 1,786, and then you look what you did back to October, 74.48. So profit. So another big win in October. We're able to identify up in the same, and then you can have another one. You can swap them back and forth. This is for folks who are just doing with the same speed across multiple time frames without institutions being involved in the trade. Almost impossible. So that's why there's such a high win rate on these, and why we have such high confidence that these institutions are in these trades. All right, and again, we've seen this. That's the actual SPY Super System template right there. We also have another template. If you get the SPY Super System, you get this template, and you'll have the alerts and everything, but I mean the scans and everything. But you'll have this template that shows all of these indicators, and then you can have another one. You can swap them back and forth. This is for folks who are just doing intraday trading off the SPY, the Qs, the IWM, the futures. This is the current time frame momentum. It's the only one you need for 5-minute trades, right? Same colors apply. This is all you really need. You get the VWAP, you get the 15 EMA, you get your pop out of the box signals. All right, that's a new template for the SPY Super System methodology trades. When I say SPY Super System methodology, I mean trading off of a 5-minute chart for a short period of time. 1 candle, 2 candles, 5 candles, 6 candles, not 4, 5, 6 hours. Those would be swing trades. You'd want to be looking at your daily chart for that. Okay, and this was a SPY Super System Heikin-Achi reversal trade that we took. We get in right here. See the compression, wicks and tails. Heikin-Achi reversal right there. This is where you take the trade. You take it short right there. Notice it went from buying to selling right there. You take it right there, and it goes down. You just stay in the trade. I don't even know how far this went, but you can see the setup here that it's breaking below the 15. The 15 becomes your stop. You write it down. Okay. I'll just recover the SPY Super Systems for the 5-minute trades.